Welcome to the Energy Experience powered by Ag Valley Co-op. I'm David Dodson, Vice President of Energy at Ag Valley, bringing you expert analysis in the energy markets. OPEC Plus has announced a planned production increase of 137,000 barrels per day starting in November, reflecting a prudent strategy as global inventories remain sufficiently supplied. This smaller than expected adjustment is designed to sustain market stability while avoiding price declines. The decision provides short-term price support and highlights internal differences within the group regarding market share distribution. Market observers view the move as balanced, with a slight upward bias due to continuing geopolitical risks. OPEC Plus maintains a cautious outlook given uncertain demand trends approaching winter. Ukraine's ongoing drone operations have reportedly incapacitated approximately 40% of Russia's refining capacity, resulting in domestic fuel shortages and reduced gasoline exports. In response, Russia has limited diesel and gasoline shipments to international markets, tightening global product availability. These disruptions have elevated margins for European and Asian refiners and increased global gasoline and diesel price spreads. Repair efforts are hampered by logistical and security challenges, suggesting continued pressure on refined products coming out of Russia to places worldwide. Oil prices are advancing this morning, building on Friday's moderate gains. WTI crude experienced a decline of nearly $5 per barrel last week amid speculation ahead of OPEC Plus's meeting, where some anticipated a possible 500,000 barrel per day production increase. Ultimately, the group opted for the more moderate 137,000 barrel per day for November, mirroring October's increment and bringing the cumulative annual increase to 2.7 million barrels per day. This aligns with OPEC Plus objectives to regain market share from U.S. shale and other non-OPEC producers. Sources indicate Russia's advocated and conservative adjustment, while Saudi Arabia supported a more significant increase. The next OPEC Plus meeting is scheduled for November 2nd, at which time the group will further evaluate market conditions and consider possible adjustments for December. According to Baker Hughes, U.S. energy companies have kept their rig count nearly steady for the week, operating 422 rigs. This number is about 12% lower than last year, reflecting producers' continued caution as they prioritize financial returns and debt management. In September, U.S. crude exports soared to 4.2 million barrels per day, the most since February of 2024. Thanks to refinery maintenance and increased demand from Asia, the widened spread between Brent and WTI benchmarks made American crude especially appealing abroad, particularly in the Asian markets. South Korea, for example, set a new record on U.S. imports. Pakistan received its first shipment from the U.S., and India ramped up purchases by taking advantage of competitive pricing and reduced reliance on Russian oil under the diplomatic pressure. Still, higher shipping costs could put a cap on additional Asian growth. At 10:30 this morning, WTI November crude up 91 cents at 61.79. Heating oil is up penny and a half. RBOB crude is the big winner today, trading up about a little over 4.25 cents. So I want to thank you for joining us for this week's Energy Experience powered by Ag Valley Co-op. I hope you found the information valuable. Stay tuned for our next update, where we will continue to bring you the latest trends in the energy markets.